John Wraith joins us, fixed income strategist at Bank of America, Merrill Lynch. Hi, John.
Morning.
0.4? Is that your forecast too? A little bit more, a little bit less?
Well, that's the thing. I mean, that certainly seems to be the fairly strong consensus. It's worth noting that the UK has the earliest of any of the G7 releases in terms of quarterly GDP numbers. We're only just over 3 weeks after the end of Q3, to which this data relates, and there is still a lot of data to be hardened up. So the irony is, as you say, it's a very important number. It could have a big bearing on whether the Bank of England does more QE following its meeting next week, and yet it is a number that's very much prone to revision in future months.
If we get 0.4, do we get QE in November? There's the big question, isn't it?
Yeah, well,
what figure do we need to get to have QE or not have QE?
I think anything weaker will certainly start to harden the market's view that QE is quite likely in November, anything below consensus. That said, listening to the members of the committee, they're still very much split. They've got divergent views, strongly divergent in some cases, and there are very different dynamics in the UK to the US. We still have inflation well above target. The labour market's nothing like as fragile as it has been in the US. We think that the members of the committee, almost regardless of what the number is today, will want to wait until the beginning of next year to see how the fiscal plans start to impact. But yes, clearly a weaker number could have people getting quite excited.
What's the greater risk? Pumping it in November or not pumping it in November?
Well, I mean, that's the question, isn't it?
I mean, surely we could just wait a few months, as you say, just wait until the beginning of 2011. I mean, it's not going to have a massive impact, or is it?
Well, it could do, but I think, as I say, with some of the dynamics, whether it's to do with inflation or the fact, as you mentioned, that the second quarter was 1.2%, one of the strongest quarters on record, and you need to sort of assess these things, in the round rather than just looking at an individual number. So whether the 1.2 followed by a 0.4, if that's what we get, is what we're seeing on average in what all the Monetary Policy Committee members have said will be a patchy recovery, or whether we're slowing dramatically is the key here, and I think only time will tell them that. So I think, there are several members of the committee who I think quite clearly would like to wait for more information. We know the US, or we think they're about to start on more QE, but they are in a much more serious situation. So I think after today and into next week, most members of the committee will want to hold fire.
25 seconds, John, on the spending review. Bond investors seem to have liked it because yields have come down. Did you like it? Well,
I mean, that's a two-way thing. Yes, it's good that yields came down in terms of borrowing expectations. Yeah. It also tells you that growth expectations are fading, partly as a result of how fast they're consolidating fiscal policy.
Did you like it?
Yeah, I mean, I think it's admirable that they're trying to get to grips with things, yes.
Yeah. Had to get that question in. Thanks, John. Now, as